The following is a presentation of TFNN. Now, the author of Mastering Probability, Steve Rhodes.
Good morning, all you wonderful money masters and treasure hunters. Welcome to the February 13th terrific Thursday edition of today's Opening Bell on the Trader's Edge. I'm your host, Steve Rhodes, and I absolutely treasure your presence here today. My outcome, as always, is to help you to become a better money master and to provide you with the tools, well, just simply the tools that each of us need in order to lead an inspired life. Because leading an inspired life, folks, that's what it's all about. So let's go look at one of our tools. This is the tool I call, it's all about our wealth philosophy. You know, our economic future is not determined by the economy, but rather by our philosophy. I was recently chastised by a listener for a comment that I made about the real opportunity for young people to learn about the markets we trade and how to play the money game and their ability to be able to attain financial independence. The listener told me how difficult things were, all of which are certainly true, and the listener went on to tell me that it just wasn't in the cards and that young people do not have that opportunity to attain financial freedom. I asked if I could have the opportunity to persuade them. And the answer, thankfully, was yes. My opportunity to influence someone. You know, I talk about influencing, and that's the most important skill that each of us have out there. We're each leaders. We've got to lead our families. We've got to lead ourselves, especially when it comes to trading and investing. These are the things that I live for. So I said, let's use an example. Because what I've found is that the easiest way to learn something is always to link the known to the unknown. That's the quickest way to learn anything. I said, do you know someone that makes, let's say, $5,000 a month? They thought about it. Said, yeah, I think I know someone that makes $5,000 a month. I then went on to say, well, how much would they tell you that it takes to live? And the response was, you guessed it, all of it. I then said, do you possibly know someone that maybe makes, let's just say, $5,500 a month? Person thought about it for a bit and said, yeah, I think so. I said, if you ask that same question, or if I ask you that same question, how much do you think they would tell you it takes to live? And, of course, you know what the response was. The response was all of it. I said, of course, and by now probably many of you already know where I'm going with this. I said, because if someone is making $5,000 a month, and then somebody else is making $5,500 a month, and they both have told you that it takes all of it in order to be able to keep their head above water, to be able to keep the wolves away from the doors, how do you account for the $500 a month difference out there? I said, see, the key is, in my opinion, it's an error of judgment when it comes to economic philosophy. And it's our responsibility to be able to point this out, to be able to show this to our children, to our young, to everyone out there that we can. Because they could be well on their way to financial independence. You know, that wasn't good enough. My response to that wasn't good enough. In fact, people could say, $500 a month, it's not going to make a big deal. Let me show you what it really does mean. Let me show you the big deal. Let me show you, back 30-plus years ago when I created the 1% rule, because it's always just a math exercise. So let me show you this math exercise, because you want to be able to pass this lesson on to your kids. Here is an example with over a period of 15 years. So for a young person, 15 years, that's nothing. But let's just take a look at what happens over a period of 15 years. If you're watching us on TigerTV, thanks so much for doing that. A little one of Stevie's spreadsheets out here. But what I will do here is I will actually, this is broken down into 3 columns. So a person that would save $500 a month, the first column out here is 3 years. 3 years, so you got 36 months out here. So $500 a month over 36 months, that works out to about $18,000. $18,000 over a 15-year period, 180 months, you're making $90,000. That's if you just tucked it away, you didn't invest it, you didn't do anything. But you see, that's not too bad. 15 years from now, they've got $90,000, right? 90, right? Now let's take a look. What happens if they were able to make 12% per year? Now, for many folks, they think, nah, that's impossible to make 12% per year. It's not impossible, folks. If they made 12% per year, 1% a month on average, instead of, just as an example, instead of making $90,000 over that same 15-year period, what they would make, folks, is $250,000. Not too shabby, huh? Now, what if they were able to really get aggressive and they're young and they were youth and they were able to, whether it's subscribe to newsletters, learn about the markets, they could learn about systems out there, read books, move to, go to workshops, whatever it takes. What if they were actually able to make 20% in a year? Is it possible to make 20% on your money in a year? The answer is yes. We know folks that do it all the time. A 20% return, folks, over that same 15-year period turns into $557,000. You can take it out for another 6 years. You're at $1.9 million. Folks, it is just a math exercise, and that's what $500 a month will do. So it's our responsibility. It's yours and mine. And if you're having trouble reading the graphics out here, it's just a simple math exercise out there. And I say that it's really all about our wealth philosophy. So let's you and I, it's not the economics out there, all the news media, everybody telling you what can or can't be done. It's just simply your economic philosophy. Oh, and if you didn't think, by the way, that you could really make that kind of money, then how is it? How is it that in just the period of the last 6 months, using the Rhodes Momentum Indicator system that I created here, our performance has been, in that 6-month time period, has been a 23.5% return? How is it? We've outperformed the S&P. The S&P did 6.3%. We did 23.5%. You could stop right there for the year. Take the year off and just let it continue. So it is a doable exercise, folks, and I appreciate the listener chastising me. More so, I really appreciate the listener giving me the opportunity to link the known to the unknown and just simply to show the power. And that's just, by the way, we were risking 1% or less than 1% in many instances out there on each of the trades that we took. So it's all about our wealth philosophy. So let's teach our children how to play this game. I hope that you're playing this game as well. Let's go take a look at the game out here right now. We've got the fish swimming in the other direction here. So it looks like the trend has changed. Right now, Dow futures off 101 points. They are trading out at 15,841. S&P futures down 12.5 points, trading out at 1804. NASDAQ futures down 25, trading out at 35.91. King dollar back 34 pennies right now, trading out at 80.39. That means we've got movement in the euro. Euro up 84 ticks. Goldilocks back $1. Silver down 9 cents out here. If we take a quick peek across the globe, let's go see what's going on over in Europa. You've got the DAX trading, where's the DAX? It's trading off 40 points. Not a big deal there. Only about 0.4%. You've got the FTSE down almost 1%. It's off 61 points. The Nikkei closed last night. The Hang Seng was off 120, 0.5%. The Shanghai was down 0.5% as well. So let's go check out these markets. Where are we? Well, where do we begin? Let's take a look at the daily charts out here. So let's start with the daily futures contracts to see what it is we have. Let's start with the NQ out here. NASDAQ futures. Now, the NDX 100 itself, I believe the composite, well, the NDX 100 I know for sure went ahead and tested the swing point high from January 23rd out there. The NASDAQ futures did not get all the way up to the top. You do have a bearish engulfing candle that is formed out here. That is a reversal signal in the marketplace. We've seen a 100% move of a move out here. This is in a consolidation. The consolidation pattern here thus far is really going to be the low of December 18th. That December 18th low inside the NASDAQ futures, inside the Qs, inside of the composite as well, all testing that December 18th level. That was in the NASDAQ futures. You're looking at 34.15 That was tested on lighter volume. That was tested on the trading session here of February the 5th. It was rejected on volume. You then got that nice bullish engulfing candle the following session on February 6th out here. It's made a run for the highs. Now what you should expect is you should expect a run really for the lows. A run for the lows, or at least a retracement, right? And the retracements that we're taking a look at, as you know, let me get rid of this out here, make it a little bit easier for you. The retracement, as you know, we're taking a look at the first one being the 0.382 retracement, and that is 35.49 out there, the 0.618 retracement. That's 34.96. That should be the minimum expectation. Most likely, it'll be a test of the lows out here one more time, at least one more time, back to that December 18th area. That is what's going on inside of the NASDAQ. And the NASDAQ is what we're going to really have to pay attention to because of the consolidation pattern that appears to be forming right now. As well, we want to be paying attention to the actual highs out here from January 23rd. We did test it. We did. So we want to pay attention to that high of 36.35, because if that gets taken out, then you know what? The NASDAQ will go ahead and it will pull all boats higher, because that tide will be saying, hey, you know what? Not ready to do much more of a correction here. But right now, we're getting exactly what it is that I was really talking about over the last week and a half. Certainly, I thought I couldn't be any more specific yesterday with regard to what I've been asking folks to do in their long-term accounts out there. You know, I wasn't sure about the signal. I think I mentioned to you I've been on some conference calls with some clients and their financial advisors, and I said, I don't mind just adding my input, and folks telling me, you know, it's impossible to be able to tell when markets are going to turn in a marketplace. And my question has always been, well, what do you know about pattern recognition and technical trading? Just tell me your experience there, and then I can help to answer that question. The answer is always, none. I don't have any experience in that. I can just tell you that fundamentally you can't be able to pick when things change out there. Well, I didn't really, yesterday's my message yesterday with regard to what to do with long-term accounts, I was fairly certain, but I got a call back from that financial advisor telling me, aha, you see, you were wrong. Take a look at what the markets just did. I think he called the top for us. 877-927-6648. We'll be right back,
folks. Who says you can't take it with you? TFNN says you can. With your mobile device and TFNN's live radio streams, TFNN has put it all in the palm of your hands. No special apps to download. No subscription fees for live radio or TigerTV streams. We say you can.
Now let's go over to the dollar, because the dollar is going to be the generator. It is the generator of basically higher dollar, lower market. And what the dollar has done, and this whole uptrend, folks, has just gone sideways. The way it works, folks, is this.
We say you can. The Tiger Financial News Network. Smart investors and professional traders know you can. TFNN.com. Educating investors. With the launch of TigerTV, TFNN has brought our programming to the next level. With TigerTV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, David White, Larry Pesavento, Andy Hecht, Victor Jones, or Terrell Martin, you can catch all of our technicians hosting their programs live and archived on TigerTV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out TigerTV, then visit TFNN.com and see what you're missing.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
patterns, profits, and peace of mind.
Are you looking for a precision edge in the market? Something that can stack the odds in your favor? Then look into Larry Pesavento's trading newsletter.
Patterns, profits, and peace of mind.
In each weekly issue, Larry explains what's going to happen in the markets based on the pattern he sees developing and gives you actionable trade ideas based on those patterns. Plus, you'll get his detailed analysis on a variety of markets and sectors, including stocks, treasury bonds, the gold market, oil, the dollar, the forex market, and more. You'll get access to all the patterns Larry is seeing in the markets, plus the Astro Harmonics and powerful Bradley stock market model that Larry utilizes for less than $5 a day. An extremely potent combination that will give you the edge you've been looking for. Try Patterns, Profits, and Peace of Mind absolutely free for 2 full weeks. That's an $85 value. Yours free when you register right now.
Get Larry's Patterns, Profits, and Peace of Mind.
And get the edge you've been looking for.
Investors, Taz Market Research delivers to its subscribers expert commentary on the analysis of 15 different markets each day. Get this invaluable and timely information through the daily market research videos Taz Market Research produces each day before 9 a.m. The video analysis will include reports on currencies, interest rates, indices, metals, energies, grains, and more. You'll be able to gauge where high profitability setups are in each of the markets. Receive a free 2-week trial subscription to Taz Market Research videos on the front page of TFNN.com. Steve takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. Dow off 106. S&P is down 13. And, not to belabor the issue or anything, but the point really at the end of the call that I had yesterday with the financial advisor was just simply this. My point is that we have had some reversal patterns that have called basically every major market top out here. I'm talking about 2000, 2007, even since the run-up in 2009, we had a market top that was prior to the flash crash in May of 2011 out there, and the same pattern was present there. It was also present at the turn in 2011 as well. So it was we're talking the crash of 29, 87, market tops out there. And so it is a pattern that you just simply pay attention to. And my whole point has been this. Like I said yesterday, I don't know I can't control the market. I can only control what I do about the market and the financial decisions that we make out here. And my point that I made yesterday was it was a huge gift that the market gave us with regard to the retracement that it was made. And it was no different. I sent out a newsletter 2 Sundays ago. I normally send out my newsletters on Monday through Friday. But when I see something that's really very important, or if I'm going to travel or something like that, I try to get it out by Sunday. And the newsletter that I sent out a couple Sundays ago was an absolute warning. It was said, look, I'm changing our positions on our long-term and our intermediate-term timeframes out here. I showed the patterns. I'm going to go ahead and put together a special report. I think it's worthwhile for each of you to have that as well. So I'll try to get that done today, see if TFNN can get that posted out there, just so you can see some of what it is that we're looking at. And my whole point yesterday was forego the next 25 points. Now, inside the ES Mini, that's what we're taking a look at on our chart here right now. This had formed as it was making a bottom with that wide-ranging bar. This had made the 1.272 butterfly, much like a Gartley pattern. This is just an expansion of that. And much like a Gartley pattern, a butterfly really has primarily, it can have 5 outcomes. Your Gartley patterns, your 0.786, 0.618, those Gartley buy and sell patterns, they're the ones that mostly have the 5 outcomes. You're typically looking at 3 to 4 primary outcomes inside of a butterfly, because a butterfly has expanded in one direction, and typically the market is going to continue to expand in that direction. Doesn't happen always, but what you're always looking at is you're looking at the 0.382, the 0.618, and the 0.786 as your 3 primary areas for where a market is going to move to or bounce. And you want to be paying attention to the bars, the size of the bars, the reversal bars. You want to really understand the signs of what the bulls and the bears are communicating to us at all times. In this case here, The ES Mini as was coming off of the low here, big wide-ranging bar on February 7th. It was in between the floors of the .382 and .618. Hey, if you're on an elevator, you're not going to stop there. Big wide-ranging bar says it's not stopping there. Sure enough, it gets up to the .618 level, takes that out, and gets up and tests the .786 area, 1821, versus on the futures 1846. And my whole point was forego the next 25 points in the market, because if those patterns get taken out to the upside, then guess what? The reversal patterns fail. There's nothing wrong with something failing. You want to learn. We learn from failure, for goodness sakes. In fact, if those patterns fail, it tells you really, really strong trend still underway out there. I said, on the other hand, if in fact this was just a nice gift to go ahead and protect your assets out there, how good would that make you feel? How would you have felt in 2000? And then I just said to the financial advisor, how would you have felt for you and your clients? Of course, I know the answer to this. He needs to keep all of his money invested out there. But how would you have felt if you could have given to your clients the advice here that, you know what, there's a pattern out here that since the 1920s have called basically every market top, and it's present right now, and it means that we should be cautious out here. And maybe going to cash, because I said cash is an investment. It is absolutely an investment out here. Protecting your cash is really an investment. And I said, how would you have felt if they didn't have to ride that market down? Because that's really what this pattern here is able to show you and is able to display out here. So what do we have going on right now inside the ES Mini? It made that .786 retracement. We're now seeing a bearish reversal candle. Hey, the day's young. Anything can happen. The bulls can rush in here. I can't control the market. That's not the point. I can't control the market. You can't control the market. So why are we going to even spend any time worrying about that? What we look for is reliable signals. We take probability risk trades out there that don't risk more than 1% of our capital on any one trade out there. And then we let the market do its thing. And if we get stopped out, we get stopped out. That's part of the money business. Part of you running your own refrigerator in your house. I guarantee you throw things out that you buy out there. This is just part of the game. You're going to have losing trades. You're going to have winning trades. It's all about managing risk. And right now, I'd say the risk is being long in the markets based on those longer-term patterns that are out there. Everything changes if those highs from late January or December 31st get taken out. We'll be right back, folks.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com. Andy Heck's powerful weekly newsletter, the Technomental Commodity Report, has delivered multiple triple-digit winning trades in recent months. And right now's the perfect time to get a full month-long trial to Andy's newsletter with no obligation to pay anything. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Technomental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you'll lock in the low rate of only $59 a month. Sign up right now for the Technomental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
And we're off to the races. We got the Dow trading off 81 points out at 15,881. S&P down 9, trading out at 1809. NASDAQ Composite off 24 points, trading at 4176. Russell 2000 down 7.5, trading out at 1125. NASDAQ 100 down 20 points. New York Stock Exchange off 59. Leading the charge to the upside, we got Time Warner Cable out here based on the buyout of Comcast out there. So let's take a look at Generic Holdings, Generac, GNRC, benefiting from the cold weather. We'll take a look at that stock. It is up about 10% this morning, up nearly about $5. We've got Retro Fin Inc. RTRX is the ticker symbol. Boy, that's up 41%. What do they have here? Trading maybe halted pending some news, so must be an acquisition going on there. Skechers, SKX is a ticker symbol. They are up a nice 13% or so this morning. Out with numbers, generating sales of $450 million versus $395 out here. I don't see the earnings on here, but obviously being rewarded nicely. You've got Oxygen Bio Therapeutics, OXBT, it's going up, and it might need oxygen. It's going up to new levels out here. It's up 23%, up $1.32. I don't see the news behind it. Charter Communications, CHTR, that's trading off 8%. That also being impacted by Time Warner, Comcast move out there. So that is why that is trading down. We'll see if there's volume behind that move. Cabela's Inc., CAB is the ticker symbol. They're off 12% this morning. URS Corp, that is down about 14%. Itron Inc., ITRI, off 16%. Medicines Company, MDCO, off 13%. Whole Foods Markets out with numbers out there. Last night after the bell, I think they are guiding lower out here, and the stock has also been guiding lower. It's down about 7.5% off $4 and change. Starwood Hotels off $4. Angie's List getting hammered this morning. That is down 16%. They generated revenue of $68 million versus $46, so a nice top line beat out there for their fourth quarter. Net income, let me see if they spent all that money. Their fourth quarter net income, $2.8 million versus, come on, do this for me. 2.8 versus 2 something. I got to change to, I'm gonna give it to you, 2.8 versus 2.43. So must be guiding lower, and they are getting hammered here. So let's go take a look at some of these stocks here that are popping and dropping. Let's look at what's moving to the upside out here. Generac Holdings, GNRC, is the ticker symbol. So let's go start off with that. Gapping up nicely, has some pretty decent volume. This thing here, okay, so Generac Holdings came back. This is interesting. Let's go ahead and delete most of this stuff off of the chart out here. Let's take a look at it. So Generac Holdings most recently had a breakout session. GNRC is the okay, now we get it. Now I get all the data out here. Wow. Take a look at what this thing did back in November 12, 2013. Remember this last year after what Hurricane Sandy? This thing really popped to the upside. October 3rd, 2012. This thing had broken away from the prior session on October. Let me make sure I get the right date out here. October 2nd. The high was 1712. This thing made a run from 1712 all the way to a high out here on October 7th of 2013. Gets out to the 50, looks like 5561 is the high out here. And this thing has gone from 5561. It made a low here recently back in November 2013. Got down to $12. Man, you want to talk about a true haircut. So this thing is a little bit dangerous. We've got several gaps inside of this equity here. What it is doing? No, I'm not. I apologize. I'm looking at the wrong stock chart. How did that happen? I'm looking at Sarepta Therapeutics. So let's take that back. Let's take all that back. We gotta. Can we rewind that last 3 minutes out there? Let's go back and take a look at Generac Holdings out here. Okay, little different chart. Boy, talk about this. So Generac Holdings, it was still back during Hurricane Sandy when this thing popped. That was back in October 2012. At least we had the months right out here. So October 2012, this thing had closed on the October 26th session at about $28.33. Next day, moves up with volume, 1.57 million shares out here. Right now, it is trading out at $54.99. It is trying to take out the swing point, or it's trying to move into the swing point here recently from January the 6th. That has 620,000 shares out there. So far this morning, it's already done 465,000 shares. Now, this thing did come back to its recent breakout session. Let's put the red line across the screen. Here's where gaps become your friend. So this thing had gapped away recently with another nice sign of strength out here. That was on October 24th, 2013, 3.9 million shares. Now, it makes a run from the $44 area all the way up here on January 6th, makes that little bearish engulfing candle after that doji that was created, a real doji candle there on January 3rd. That's important. Comes back and it tests the breakout area. Now, test the breakout area January 24th, 3.2 million shares going against 3.9 million shares out here. Now this may be in a bit of a consolidation if it cannot take out its highs at 57.27. If it can't take out those highs, even though it's moving up there with volume, says that it'll be down here one more time again in that $45 area, and that is on Generac Holdings out here. Now, let's go take a look at RetroFin. RTRX is the ticker symbol. I promise to try to keep it on the proper ticker symbol when I'm doing this here, RTRX, so I don't do one of those brain contusions out there like I did here a few moments ago as we were taking a look at Sarepta Therapeutics. Now, if we take a look at RTRX, this thing is breaking above a B point of an A to B equals CD. Down, this thing here has not had much in the way of volume, so this is a stock that was trading out at about $5 just back in November of 2013. It's at $15, so it has made a nice 300% gain out there in a short period of time. Nonetheless, it is taking out a B point of an A to B equals CD to the downside. Let's see what that price projection does for us. What the heck is going on with my system out here? Let's see what that price projection. Your A point is going to be the low of $5.35. Your B point is out here on January 16th. Out at $14, an even Steven high. Pulls back into the gap up out here. Does that on February 4th. 1-to-1 A to B equals CD. Says this stock ought to get to $17.76. I'd have to say $20.10. But with such little liquidity in here, I would say do a bunch of reading. This is a time where I'd say go to the SEC site, type in ticker symbol RTRX, and read what it's all about out there. Let's take a look at Skechers. This has been around for a lot longer. SKECHERS. X is the ticker symbol. Let's go see what it is doing out with earnings and revenues and trying to take out some resistance out here. Little key reversal session that it had on December the 6th, bearish engulfing candle. That's the swing point high as well. That area is being attacked with volume. Looks like that should be able to be taken out. That actually could be turning into a very large A to B equals CD to the upside here. That price on December 6th, $34.95. You're at $34.69 right now. Only 459,000 shares out there. This right now trading up into it with 458,000 shares. So we already got that volume in here today. And, boy, let's put this on a weekly chart out here. See what it's doing for the week. Take a look at an A to B equals CD pattern inside of Skechers out here. So it's got that little doji candle, which is a lot of meaning here at a resistance level. That says that resistance here on the weekly chart is the $34.95. So if we can get above that on the weekly chart, it's all systems are go. I would have to say we take a look at the small A to B, a smaller A to B equals CD. That would start from this hammer candle back here on November 16, 2012. That's your A point, 1518. Your B point out here, let's see, does this make a lower low? Yeah, it does. So you have to really, to do your B point out here, is going to be that doji candle at $34.95, December 6th, and it pulls down into last week's low at $26.46. 1-to-1 A to B equals CD. Says this thing could move up to the 46.32 level. It's at 34.65. Would he have at 46.32? Well, it's going to have to take out its all-time highs, which took place back in June of 2010. That was at 44.90. So it's going to need to move up there with about 7 million shares. If it can do that, it will go ahead and complete that longer-term A to B equals C to get you in that $46 area. That is on Skechers. Let's go take a look at some things that are moving to the downside right now. Leading the charge here, Charter Communications. That is now that Time Warner is off the table for them, or would appear to be off the table for them. We'll see. CHTR is the ticker symbol. So that is trading lower this morning with some volume behind that move out here, trading down about 10%. Off $13, but it's trying to mount a charge. It's running right into the 200-day exponential moving average. That happens to be priced at about 124.24. We'll see if that level here can hold. Let me see what else this is perhaps moving into. Charter Communications. It's trading. It's trading into a set of swing points out. Let's pull this up here. So you got a little hammer candle that formed here on December 9th. So this low from December the 9th, this is a daily chart. That's important, 126.31, because if you close below a hammer, if you're long, you're wrong. You know the expression. So the key number here for Charter is 126.31. You close below that, that ought to send price down to at least the next swing point level. That's your next target area, and that's on August 29th, 2013. That low about 119.06. That's Charter Communication. Let's take a look at Cabela's Inc. They've now jumped into the lead out here on the way down, off almost $10, down about 14%. For these Charter Communications, I apologize, down 7% off $10. It's Cabela's that is off 14%. I think I have to have my eyes here checked. Now, it's just my alignment. It has nothing to do with my eyes out here. So CAB is the ticker symbol out here, and it's trading down at $60.18. This has big volume behind its move out here. Let's pull this back. This had some, this is trying to pull back into an area. This thing had broken out on the trading session. It's a daily chart that we're looking at. CAB is a ticker symbol. We'll draw the line across the screen out here so we can see its last breakout, which was on the trading session of April 25th. 2.5 million shares were traded then. This thing pulled back into that area with 3.3 million shares. So that was a bad scene when you pull back into the actual breakout with volume. That's what Cabela's did here on October 24th. Obviously traded a little bit lower. If you're watching this on Tiger TV, got into the gap, didn't close the gap, but it was moving down in there with volume. Well, it's doing the same thing here today. Looks like this time it's probably going to break through it, because the last time down here was with, what did I say, about 3 million shares. Today it's already done 2 million shares. So this is in the process. You know, the A to B equal, not really an A to B equals CD that you can see out here. So what I would say is you'd be paying attention to the high volume gap down out here. This bar, I would have to say the area where this thing ought to try to find some support I would just take it all the way back to this swing point from April 20, a second out there at the 5307 type area, and that is on Cabela's Inc. We've got URS Corp out here. That is trading down about 15%. Let's go see what's inside this move here, where this may be headed to. So trading out at $41.82, gapping down with some volume out here. This showed some signs of some large selling, institutional type selling. This was back on the trading session of November 6th when this thing moved down with 2.2 million shares out here. Now, talk about a really large gap. This thing could easily, boy, this is where it's headed to, this high volume bar out here. No wide price spread, so that's always dangerous. On November 30th, 2012, that's at a price level between around we'll call it $37. It's trading at $41 right now. I don't know that will actually stop the fall. I would have to say $33 is more likely the target area. And that is ticker symbol URS Corp out here. Let's take a look at Whole Foods Markets. Let's go see what WFM is doing. Let's take a look at a daily chart. Gapping down, it too has some volume behind its move. Not the first time we've seen a gap down inside of Whole Foods Markets out here. Sheesh. Let me just update this. This looks pretty darn nasty, doesn't it? Let me refresh my screen out here. Okay, so as we take a look at, there we go. That's a little bit of, you guys got to refresh the screen. So we had Whole Foods Markets. It's now taking on a B point of an A to B equals CD down. That means this session here today is very important, and that low is $50.62, and that is the January 27, 2014 level. 4.2 million shares there. You've done 4.9 million shares already. So if it takes that out, your larger A to B equals CD down inside of Whole Foods. That would take you down to the price level of about $41.45. I say, nah, it's got to go lower than that. Of course, at $41.45, it'll take you all the way back into the swing point out here from April the 8th. Now, here's the danger thing out here with regard to Whole Foods, because take a look at this. And we've seen a couple of these in some of the equities. So we'll pay attention to Whole Foods. I'm starting to keep track of all these island reversals. I've never seen so many large island reversal, potential island reversal patterns. And what I'm referring to inside of Whole Foods Market, I'll blow this up on my screen here for you. If you take a look at Whole Foods, this thing had gapped up. Nice sign of strength on May 8th, 2013. That was with 17 million shares to the upside. And the low of that session here is 49.88. So let's just say that sometime tomorrow, this thing gaps down. This would create one heck of an island reversal candle. That would be one for the books. We'll be right back, folks.
You've always taken the long view when it comes to investing, but what if there's an opportunity right under your nose? What if you could be more responsive to market trends to seek to boost your portfolio performance right now while seeking to reduce your overall risk? At Direction Funds, we connect investors with alternative strategies that seek to maximize their returns. Smart investors deserve smart alternatives. Find yours at directionfunds.com. An investor should consider the investment objectives, risk charges, and expenses of Direction Funds carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Funds. To obtain a prospectus or summary prospectus, please contact the Direction Funds at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. Investing in index funds may be more volatile than investing in broadly diversified funds. Distributed by Rafferty Capital Markets, LLC. David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today. Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to the Gold Report, an $85 value, visit the front page of TFNN.com today.
Catch the Money Masters as they teach you the art of mastering money when it comes to trading and investing. Next on TFNN.
Welcome back, folks. Dow's off 62 points. S&P is off 5. NASDAQ Composite down 8. Russell 2000 off 3 points this morning. So we've seen back some of the losses here paired this morning. Of course, if we take a look at the 30-minute charts, we're going to see the market had moved down into a oversold condition. So that is normal to see some kind of a bounce here. Key is going to be in the ES Mini, the 1814 level. We'll see if the ES is going to bounce up to that area and whether that area will act as a resistance point out here. So this is just nothing more than the rubber band being stretched, working off oversold conditions out here in the marketplace. So we go take a look at the currency pairs. We haven't done that here yet today. Let's go take a look at our friend, the euro, Japanese yen. Let's take a look at that on a daily chart out here. If I can find it, Euro Japanese yen right now trading out at 139.24. This looks like this is in the process of forming a large A to B equals CD down. The resistance area here right now happens to be the trading session from 2 days ago, February the 11th. That high out there at 140.29 out there. If that level is not taken out, then and we continue to see it move lower, we're taking a look at a large A to B equals CD down. That will go ahead and take the Euro Japanese yen down into the November 8th swing points out there. It'll make at least a 1 to 1.272 A to B equals CD. That will go ahead and keep pressure on the U.S. markets out here. Let's go take a look at the other currency pairs as well. We'll go take a look here at the euro. Where is it? There we go. Euro U.S. dollar. We'll bring up our weekly chart out here. We can see the boinging, if that is a technical term, being price here being contained within the rising price channel and the descending price channel just keeps getting narrower and narrower as we move towards this apex. Which way is the euro going to break? I don't know the answer to that. I just know that we will see it break one way or the other. Speaking of breaking here, it is our friend, the Great British Pound. It is trying to pound through that resistance level Where is that chart? Should be somewhere on my screen here. Did I somehow do? No, here it is, right here. Here's the weekly chart here for the Great British Pound. So it is Thursday. We still have, another day and a half, good day and a half or more worth of trading. We're going to see if it's going to try to be able to break through. That's the black line on my chart, my horizontal line. If you are taking a look at this on Tiger TV, that is the level of about 1.645. We can see here that for a period of several months, this has tried to break above that area. Each time it gets thrown back. So we'll see if, in fact, it will occur again this time. Let's go take a look at that is the weekly chart that we're looking at. Let's go take a look at the shorter-term chart out here. I'm sure we had one from yesterday that we were looking at. This is the Great British Pound U.S. dollar. Yes, we do. So let's take a look at it, see what it has done. So you can see that 100% move out here on the 30-minute chart, getting also into that extreme overbought condition. So now it is working that out. It has not been able to bust out over that level. We are seeing it had a little shooting star as it did that. That was at 9 o'clock here this morning. We're seeing some additional confirmation. What does that mean? It means that we're taking a look at a move lower. What I would be looking at here, if you were trading this currency pair, I would be first taking a look at the trend line probably. I would say I would use this as my trend here. That would be the trend line that I would be looking at. Let's take a look at what that retracement level, if we get a conjunction coming back into that area. Yeah, we do the 0.382 retracement, about 165.12. So if this thing breaks the 165.12 level, it would say to me that the Great British Pound will have failed for another week. Of course, we have till tomorrow in trying to break out through those highs. Folks, if you're off to start your Thursday, have a terrific Thursday. As always, thanks so much for joining us. Have a great day. I look forward to seeing you tomorrow morning, or maybe in about 10 minutes. Take care, folks. Hi, I'm Steve Rhodes, host of the Money Master Show at TFNN.com. Eastern legend tells of a fair maiden who was offered a rare gift by the king of the land, a bag of pearls. The king promised that she could keep the largest, most perfect pearl she could find with these 3 conditions. 1, choose only 1 pearl. 2, remove 1 pearl at a time, accept or reject it. And 3, if rejected, it would be lost forever. She began by looking at the pearls, passing on many special treasures. She delved deeper into the bag, and soon the pearls were replaced with pebbles. Sadly, she went home empty-handed. Folks, replace pearls with time, because we cannot go back even 2 seconds. We live in the eternal moment of now. So when now are you going to take advantage of my offer to you, a subscription to my daily investment newsletter service, Mastering Probability, where you can experience the most incredible pearls for trading and investing, the Rhodes Momentum Indicator and Strategy. The offer? It gets better. A 30-day money-back guarantee. Don't go home empty-handed. Mastering Probability. Available on the homepage of TFNN.com.
You're watching Tiger TV.